Hello, everyone, and welcome to Let's Talk Markets Live on this beautiful April 3rd, the day after Liberation Day. Let's start off with a classic scene from a classic movie to ground our conversation today.
In 1930, the Republican-controlled House of Representatives, in an effort to alleviate the effects of the, anyone? The Great Depression, passed the, anyone? A tariff bill, the Hawley-Smoot Tariff Act, which, anyone, raised tariffs in an effort to collect more revenue for the federal government. Did it work? Anyone? Anyone know the effects? It did not work, and the United States sank deeper into the Great Depression. In 1930...
Oops, all right. Ben Stein laying it down. Right here we are. Welcome, Claudia, Sahm, Ophir, Gottlieb. Great to have you both back here to talk macroeconomics and markets on Let's Talk Markets Live. It is the day after Liberation Day.
Liberation Day.
Are you feeling liberated? Are your 401ks feeling liberated?
Yeah. I do appreciate you starting us with humor. If you're not laughing, you're crying at this point. So
that's right. So as we jump on, just a quick look. S&P is down 4%, Nasdaq down 4.7%, almost 1,000 points. Crude down 6.6%. Gold down 1%. I don't have Bitcoin up here. I'm sure it's also down. So decidedly a risk-off day. The markets are reacting to Trump's announcements of tariffs yesterday. A global minimum tariff of 10%. But much higher rates on various countries, including China, which not entirely clear what the exact rate is now, but an additional 34% on China, 24% on Japan, 20% on the European Union, 46% on Vietnam, 32% on Taiwan, and of course, newly placed tariffs on the uninhabited islands off of Antarctica, because that's a very important global economic policy for trade, to rebalance trade. So here we are. We're tariffing penguins, amongst others. Interestingly, there were no new tariffs announced on Mexico or Canada. The Canadian tariffs appear to be sort of on the back burner now, with the change from Trudeau to Carney, which seems to have mollified Trump for the time being, other than saying things that are not USMCA compliant are going to be tariffed. And I think the 10% energy tariff is still on, which is, well, we can get into that. That's a very unusual policy. So what do you guys think? How bad is this? Does this put the U.S. immediately into some kind of stagflationary environment? Is that the concern, the primary concern? And let's start there. Yeah, Claudia, what do you think?
Right. So tariffs are a stagflationary impulse, right? And to be very clear, it's that it pushes down on growth and it pushes up on inflation.
Right.
Now, this is not necessarily like, oh, this is 1970s double-digit inflation, double-digit unemployment, but it's certainly pushing us in the wrong direction. And that is important to kind of think about, what does the economy look like this year? Do we, are we going to stagnate? Is there a recession coming? I'm sure we'll talk about that more. But there's also a bigger question about, where is this pointing us in terms of global trade and our institutions and the US's like standing in the world? Like, to me, there's kind of the forecast of the near term, and then there's some really bigger questions that this raises about, how these economies are going to interact. But that's really, after watching yesterday, that was just what was so hard, is you feel like you're really watching a sea change, a real shift that could have bigger implications than just what's inflation this year.
Yeah, and it's another. So Mexico and Canada not mentioned yesterday. A few other countries that were left out: Russia, Belarus, North Korea, and Cuba. interestingly. And yet I think almost every other country was put in there.
Well, he didn't. I mean, he didn't talk about them because we don't do trade with those countries right now. There is no. It's not that there's not a trade imbalance. There is no trade.
Yes, fair. But we have threatened Russia at least, and
that's okay. But I'm just saying. I mean,
ways, right?
Look, I think it's all a terrible idea. But in fairness, there is no trade.
Okay.
And there is no numerator. There is no denominator.
Right, and so that's the key, right? The tariff rates were determined essentially strictly based on the trade deficit that we run with those countries. Yes. And that gets us to, I told you both before we jumped in, you know, there's another side to present, which is what are they thinking? What are they looking for? You know, what does the administration hope to get from this? And what's their desired outcome? And if you look, I read Oren Cass quite a bit, and he often provides at least some sort of theoretical justifications for a lot of these policies. And the first premise of the goals that he lists out, the first one is balanced trade. And you know, he would say that the situation we are in now is that things that were once made in the US have moved elsewhere, not because they have an advantage in production and not because we're making more of something else once made elsewhere, but because these countries have made policy choices to expand their own manufacturing sectors at America's expense. And that this is an attempt to rebalance that trend. You don't look impressed, Claudia.
Yeah, so one can make argument, like there's some precision to that argument, a little bit, right? You talk about manufacturing, but what we are getting in terms of policy is a sledgehammer. We are tariffing goods that we can't like physically produce in the United States, like coffee, right? Or things that like this isn't there. The tariffs are a tool that has been in the toolkit for a very long time. There are arguments that one can make. I think some of the national security arguments strike me as more have more basis than this. Like we lost the manufacturing, but they're used in a surgical. You have a process to determine if there's actually, you know, some kind of trade protection going on, some kind of anti-dumping. You don't just blanket. Look at countries where we're importing more than we're exporting and just put these, slap these tariffs on the country. So I think this is where like you can make some intellectual arguments, but you have to be very careful in tracing that the intellectual argument actually ties all the way through to the policy intervention. And in this case, I think really yesterday with Liberation Day, like they lost the thread completely in moving to what was actually done or what's been threatened, you know, to do to other countries.
They also have dual goals, which are contradictory: to pay off national debt by raising tariffs, but also to spark a manufacturing boom. Well, tariffs produce revenue for the United States if American consumers import. And if we spark a manufacturing boom, then we won't import. So then we won't get the tariffs. So you can't have both. So I just want to point that out. Also, Cass is just 100% wrong. India, China, Vietnam jam pieces of plastic into other pieces of plastic. What do we get for it? We create ChatGPT and iOS and Windows and Android. So they get the 37 cents and we get the $4 trillion. And if people don't like that, or if they can't see that, then you just aren't looking. They jam things in and we make $4 trillion. That's how that works. That's how trade works. You do that, we'll make the brains for everything, right? You make the Walkman, we'll make the greatest bands in the world, which play on the Walkman. Okay, you make the iPhone, we'll make the operating system. You make a little bit of the cars, we'll make self-driving. That's what we get out of it. It's just not right. So we shipped away those jobs, and of course, for people whose jobs are shipped away, that sucks. I'm not saying it doesn't, but it is.
So one of the professed goals is to get bilateral trade deficits down to zero. Of course, they are specifically referring to goods, not services, right? In which we run a trade surplus, of course.
Which is why we're so rich.
Exactly.
which is
but
why Cass is wrong.
but would you at least concede that that has also driven wealth inequality? That it's easy to hand wave away manufacturing jobs because we're getting now great services jobs, but these are not things that people can substitute, right? The people who are losing their jobs cannot pivot to the knowledge economy, or generally don't, at least, right?
Yeah.
And that's been terrible for a large part of the country for a long time, for decades now.
Yes, when everyone is taken care of, there's a name for that. It's called communism. No, it's not a criticism. No, I did not mean comedy. That was not criticism.
Mm-hmm.
I'm saying there is a fundamental government structure. You can call it an economic structure, but it's a centralized government such that these things don't happen, and it's called communism. That's possible if you'd like. The alternative to that, let's say on the other end, would be capitalism, and there's stuff in between like socialism. Okay, so America's a capitalistic economy. We're not a command economy. I mean, we're getting pretty centralized, but it's okay. So that's it. It's not that such things don't exist or such things aren't real, or that there isn't a remedy for them. It's just that the remedy is something that America doesn't do. That's it. I've been to Cuba. I'm sure you guys have too. I've been to Cuba in 2003, and I went to where they make cojibas, the cigars, and there's a person rolling cigars, whatever, and then there was a person sitting in a chair next to the person rolling the cigars, and I said, "What's that person's job?" And they said, "That person's job is to watch that person."
Right.
That's a true story. So, yes, that person.
I think you
has a
just
job.
described the Canadian government employment situation as well.
Mm-hmm.
I mean, yeah, and I'm up here in a socialist country where you don't have the same wealth inequality, you don't have the same extreme wealth or extreme poverty. You have a pretty substantial social safety net that helps. You still have, to some extent, manufacturing and mining. I don't know that. I'll be fair. I don't know the exact numbers, but it seems like it's an economy that's working reasonably well. But when you look at it per capita relative to the U.S., it isn't that impressive.
That's right.
But it's an affirmative decision not to have medical bankruptcies, for example, and not to have the same level of inequality. And so maybe you don't need the same level of per capita income.
Yeah, I mean, no argument against anything. It's just not what we do in the U.S. So to then say, hey, how can we have pain? We have to take care of the pain. It's like, no, that's just it. There's no such thing. There's always pain in the economy. It's either everything is flattened and you have a centralized economy, communism, or you have capitalism where there's, people gotta move. Mm-hmm. No one's going to cry when my job goes away. You think AI is not going to take my job away? No, I'm serious. What do I get trained to do?
Yeah.
But that's what I've decided to do with my life, right? And then I'll do something else. And yes, I'm considering becoming a plumber. I don't know. It'll pay the bills. It'll pay the bills.
But do you have the crack for it?
We'll see. We'll see. If I have it.
Sorry. Yeah. Okay, so let's talk impacts here. Let's walk through what are going to be the impacts of these policies, of these tariffs, because I take your point. It's not exactly a tariff. This is a blunt instrument. This is not marginal taxation to try and rebalance things. This is really an attempt to rebalance the entire global trading system. Severely, it seems, penalize many of the Asian countries that have taken manufacturing over from the US. Still, penalizing some of our allies, but maybe giving them an off-ramp to negotiate better trade agreements. But how do you think, Claudia, this is going to play out over the next couple of months at least?
Well, if we think about it first, like economic impacts in the United States, it's really best to think of the tariffs. They are just a tax increase. The cost of this in large part probably will be borne by U.S. consumers in terms of higher prices. The other piece, and you talked about wealth inequality, but the other thing to remember with tariffs is not only they are a tax on consumers, they are a regressive tax in the sense that it
Right.
hits those with the least income the most. So in some ways, it is true that when we had the globalization that has happened, the manufacturing jobs that left the United States, there were winners and losers from trade, right? We've had consumers really benefit from the lower prices, and there were communities and there were workers who lost their jobs from it. But as we're trying to reverse this using tariffs as the tool, you're going to hurt some of those same individuals a second time around, because and the numbers, especially the tariffs, once we've gotten up through what was announced yesterday, these are big numbers. So out of the Yale Budget Lab has been running a model on the different tariffs as they come out. Their estimates were for, if you look at households by income down the second decile, you're talking about a 4% cut in disposable income from the tariffs that have been announced so far this year. Up in the top 10%, it's more like a little over 1%. So these are still big numbers, but I mean, you're hitting the people at the bottom the most, and those are substantial numbers when we think about that. Where consumer spending is almost 2/3 U.S. economy, and for many consumers, what drives their consumption is their paycheck or their income. And so these are not trivial numbers. I mean, this is some real pain that's going to hit the households, and using a regressive tax and justifying it that you want to help the working class is just, it's really pretty outrageous. So, there's the hit to disposable income, which we'll see in slowing in growth. And at the same time with the inflation. Now, the inflation is probably more of a temporary, in that we're kind of level setting up to hit these tariffs. But I think, the fact that we've gotten into such large magnitudes and we're really in an adversarial position towards our trading partners, I think the case gets stronger that this isn't all going to be temporary. Like, those gains from trade that have held inflation down, made that 2% target possible for years, like some of that is likely to slip. And so, I think that's just looking at the near term. And I know we're going to focus a lot on tariffs today, but it's important to remember that the administration has pursued multiple anti-growth policies in the short time that they have been in office. And so we have federal government layoffs, we have grants being cut into government adjacent sectors, we have immigration basically coming to a standstill into the United States. I mean, you put all that together, and the risks of a recession, even if it's not bottom falls out tomorrow, the risks of recession have really moved up. And we know that even once you get past that, like the pain that causes to workers, it really lasts. So this is not, this is a pretty dark outlook at this point.
Yeah, I'd also point out it's regressive not just because any flat tax is regressive, it's a tautology, but also because less expensive items tend to be farmed out, and less expensive items tend to be the items that lower income households consume. More expensive items tend more to be built or produced here. And so those prices actually won't go up. So it's even more regressive than just the flat tax. So it's actually like if you want to talk about wealth inequality, this exacerbates wealth inequality.
Absolutely, 100%. So, the Yale Budget Lab numbers, Claudia, that you talked about, the numbers are a $3,800 hit to average income, a $1,700 hit to low-income families, a 2.3% increase in prices, and a GDP contracting by 0.6%. But then I saw some other analysis. I think I'm not sure where it's from, but it looked at the long-term impact on prices, where the U.S. imposes a universal 25% tariff, and then those countries retaliate, which is something that we're not even talking about right now. We're just talking about the direct impact of these extreme policies. But that talks about an inflationary impact to the U.S. of 5.5% once the trade war and retaliation comes.
Look, if let's say we don't know, let's say these are where the tariffs land. Let's just say, I don't know. We have to say something, so let's say that. Mm-hmm. I'll go out on a limb and tell you, I will guarantee you there will be tariffs on U.S. services. I'll guarantee it. Mm-hmm. Netflix will not cost what Netflix costs now. Not in Europe. Nope. Mm-hmm. It just won't. And you want to feel pain? You watch tariffs on services on 80% of our economy. That's pain. And we won't be talking about a long run 2.1% increase in inflation or a 0.6% hit to GDP growth.
Right.
We would pray for those numbers. There is no part of the world right now that, because this was so universally applied, and as Claudia said, like so blunt instrument, right? There's really no country out there that's like, hey, hold on, like these are our allies. They're actually all, maybe not literally, but let's say, colloquially teaming up together and saying, fuck the US.
There was a story out there that said Japan, South Korea, and China were going to team up.
Do you know who that was from? Because the source I saw was from someone who's been known to work for the Communist Party's media in China.
I did find it hard to imagine.
No, it's a fake Twitter account. It's a fake Twitter account with a picture of a blonde girl. Yeah, so I don't know if that's where you saw it. I saw that too, and I know that account's fake. So just remember, we don't know what real is, and it shouldn't be coming from.
Right, we can't even tell.
But I'm not denying it. I'm just saying that one person is
fair enough. No, but I think you are seeing, other countries start to talk about, Canada, for example, is starting to talk to Europe about, how do we work together against all of this. But Canada is also, I think, I think the first 6 weeks of this administration were driven by Trump's hatred of Trudeau more than anything else in terms of his policy with Canada. And as soon as Carney came in, the entire tenor changed. There was no, they had a call, it came out, there was no question of Canada's sovereignty, which is,
Canada just announced 25% reciprocal tariffs.
They did. And this is the concern, right? And this is the part that I get, that you kind of, you need to stand up and do something when you're being attacked. And yet, does it really make sense to tax your own people in reaction to someone taxing their people, right? I keep struggling with that. And maybe that's like, I have this more traditional, economics education that says that, there's no winner in a trade war, of course. And free trade is better than protected trade. But this seems like a clear situation, especially for an economy so reliant on US trade like Canada is, to say, okay, you go do that. We're not going to do anything. Maybe it's just not politically tenable. But economically, doesn't that seem like the right response? And Carney should know that, right?
Yeah. I don't. Economically speaking, the correct response, hypothetically, unless you're really going into game theories, to not be reciprocal or to add reciprocal tariffs. But there is game theory attached to this.
Yes, it's a tit for tat, which is maybe the optimal game theory response. Yeah. Right. Fair enough. Okay, so do you think, I know it's hard to speculate, do you think that that what's happening now is that hopefully the White House is going to start offering off-ramps to some of the targeted allies? Or is it really like we're into a whole brave new world and a true realignment? How much of this has been bluster, like geopolitical bluster, which is what it feels like has happened with Canada, where there was 6 weeks of this intense policy that seemed like it was going to destroy the country economically, and now we're backing off, and we're starting to, he's starting to realize, if you want a trade war, you need allies, and Canada's probably a pretty good one, as is Mexico, and maybe there are other trading partners that can be part of that bloc. Or who knows, right?
I mean, at this point, just the breadth of the tariffs, the logistics of the negotiation, and also these, so-called reciprocal tariffs, which that's not what they are, but it's like, it's not even clear what you're negotiating on. Mm-hmm. Because it's not like those tariff rates are tied to a tariff rate in the other country, or even tied to some quantification of their VAT or they're just, it's just a mess. So how do you even have that? So you have a very messy negotiation process, and you're doing it with all countries at once. And the thing is, listening, as hard as it was, listening to the Liberation Day extravaganza, this is exactly what Trump has wanted
I agree.
all along. I mean,
That's right.
this is a full assault on trade. This is it. We need to make it all in the U.S. It needs to be produced. Like this is just such. So it's like, how do you negotiate with that? Like, how do you? I don't know. So to me, like, yes, some of this probably will get negotiated down. There'll be, I mean, likes to make deals. I'm sure this will, this probably isn't, the ending place of it, but it kind of feels in the space of where they would like to see the trade policy in this administration. And we're like very early in 4 years of
like 78 days in.
Trump.
Yeah, I think.
Yeah.
No, I think first of all, I think people have been gaslighting themselves. I'm happy to criticize any politician, including Trump. That's fine, but I actually don't think. I think he ran on this and delivered it. I can't believe. So I'm not saying it's a good idea. In fact, I'll tell you, it's a horrible idea. Having said that, Trump ran on this and is doing it. So anyone who's like, it's a negotiation tactic, and maybe it is, by the way, and only you guys are going to fall out of your chairs. Trump told the truth.
Yeah.
Trump told the truth.
That's right.
He ran on this and delivered it. If you don't like it, which I don't, fine. But he ran on it and he won an election and he's delivering it. There's no lie here. There's other lies, but that's not a lie. Also, this is not going to change the world order. It takes, I think we've probably all got the same sources. But factories that exist but are offline take 2 to 3 years to bring online. New factories are more like 4 or 5 years. Trump is no longer going to be president in 4 years minus 78 days. There was friend-shoring or near-shoring. Companies moved away from China to go to Vietnam or Cambodia or to Mexico or to Canada. They're not going to do it again. They will roll the dice. I'm not saying Trump's going to buckle. I'm not even saying that. That's also possible. It's not my claim. He's going to go away in 4 years. It's just a matter of fact. So I'm not casting aspersions. He's going away in 4 years minus 78 days. It takes that long to build the plants anyway. They're going to roll the dice. They don't make any more money. Now you could say, okay, hold on. If they start building a plant, then that product from that company will get a tariff reprieve. Okay, now we're talking about like millions to tens of millions of different negotiations. And it's possible. I don't see it happening. Mm-hmm. So I don't think it changes. I think it changes the world order in the sense that we don't just snap back to good relations with the world, right? That's always been the fear. It doesn't matter who comes in next. And, and this was done by executive action order, so it can be reversed by executive order. But no, we're not going to get more manufacturing. Even if we do, it won't happen within the next 4 years. There won't be more jobs, and it's not going to work. It's just not. If manufacturing could come back in 6 months, then you say, look, this is what he promised. He's delivering to his constituency. We don't have to like it. He won. But that's not the case. He did win. He is trying to deliver to his constituency. It's not going to be done until he's not president. So no one's going to do it. They already moved to Vietnam.
It seems a shame that, and I know this is not quite a perfect parallel, but like the CHIPS Act to me was just an excellent example of onshoring manufacturing in a very specific way in a very specific industry. Yeah, I know. Is that practical to do for like the textile industry? Probably not. Maybe more on the automotive side. There are probably areas in which you could have a similar model if you truly wanted to onshore manufacturing while not causing pain to the people who can least afford to experience that pain. And I find that I'm having these conversations online with people that you can disparage the tariff policy, and they'll come to you and they'll be like, yeah, well, you don't understand what it's like in my town that was a steel town that has been decimated. And I'm like, I don't disagree with you. Like globalization, I think, and I don't know, Ophir, you sort of started to disagree with me, but I do think that that globalization was a failure in many ways, and the way that it gutted, the manufacturing industry in the U.S. is one of those ways, and that there are policies that you can put into place to start to change that back in some ways. You're not going to go back to the manufacturing revolution that in the U.S. of 100 years ago, or even 50 years ago. But you can start to say we need to make stuff again. There's value to making stuff in the country, And here are the things we want to focus on making, because these are high value goods like semiconductors, right? That's really important. Brings a lot of jobs, very high end jobs, great jobs. And there are other things that you can look at with the same approach versus this sledgehammer.
Yeah, no, security things like pharmaceuticals, for example.
Exactly, right? Like, why are we depending on, I think, China for all our antibiotics? Like, that's crazy. Just craziness.
I don't know if that's true, by the way. It was just a claim, but
okay.
but it doesn't matter if it's true or not.
Yeah.
It's a fair claim. That's all I'm saying. It's a reasonable claim that we should make pharmaceuticals. That's for security.
Yes, and there are other, again, like back to Orencast, who, yeah, sure, okay, I get it. But he said, besides rebalancing trade, there are two other goals with these policies. The first is burden owning in terms of defense spending. Okay. And I find that to be perfect. I find that to be probably the most compelling goal. I'm not going to say this is the way to achieve that goal, but it does make sense that other countries should stop relying on the U.S. for defense. And then
that removes us from a certain part of power. But sure, go ahead.
He points out, like, look at the relationship with Israel, right? Like, we still have plenty of power, plenty of influence, a tight relationship. They spend enough money to defend themselves. They need some of our arms. That's his model of a good national security geopolitical relationship. And then the third is China out. The requirement of participating in a U.S.-led economic and security alliance should be the maintenance of a collective perimeter that excludes China.
Yep.
And that's, again, like these seem like reasonable goals, and does wrecking your allies' economies get you closer to those goals, I think, is the problem.
Look, right? We have a 54% or 74%. I don't really know on China. It's definitely at least clear. 54. It's either 54 or 74.
More than 50, we know. Yeah.
Yeah. This is going to sound totally bonkers and backwards. I think tariffs on China should have been higher. I think we should have, for all intents and purposes, shut down trade with China until certain things were done. They got to stop stealing the IP. Just enough. That's it. Yep. And stop with the components that make fentanyl. And if they don't, then that's it. The U.S. creates partnerships globally, and it's just China out. And that's not where Trump went, by the way. So I'm actually going more extreme. So I agree.
I don't disagree with you. I thought when he first came in and he levied 25% tariffs on Canada and 10% on China, that was just batshit. Like, how much more backwards could you be?
There are arguments for some of these things, but that's not the thing.
Right.
Is this is crazy. We are arguing for things that are so trivial with regard to, or in comparison to, what has happened. It doesn't matter. It's like getting 3,000 brand new cars and arguing that one of them has a loose screw on the seat. It's like, yeah, we should fix the loose screw on the seat. But we're talking about 3,000 cars.
We're going to compact the car in order.
Yeah, we can argue about that if you want, and it's true. It's a true statement. It's a fair statement. We should produce pharmaceuticals. We should lock down China. All true, but that's not what happened. So let's not talk about like that. You can burn. How about this? You could do Noah's Ark onto the world, drown the entire world to put out a campfire. Yeah, we put out a campfire, but you also drown the fucking world.
Right.
So let's not pretend he put out a campfire. He drowned the fucking world.
No. I'm not going to argue at all. And I think the things that we have done outside of trade policy, especially in terms of our soft power, are the kind of things that are going to be long-term detrimental to these alliances, right? The aid that we are no longer sending, the people that are dying because of that around the world. It seems unnecessarily cruel.
Yeah, absolutely. Also, by the way, I just want to, since I sound so anti-Trump, I just want to be clear that in the first Trump 1.0 China tariffs, I was standing ovation in my house, just so you know. No one was daring to do it, and he was criticized wholly, and I was like, you guys are crazy. This is a great thing that he's doing, and it's way too late. Just so people watching know, I'm entirely critical right now, but the beginnings, no. And by the way, just to prove that it was kind of right, Biden came in and not only did not reverse, it was by executive order. He did not reverse them. He raised them.
Right. Yeah.
So nobody likes to talk about it. There was actually bipartisanship on something that when it first came out, people said, "Oh, Trump's a maniac." It's It's like not so much.
Oh no, I think these are the two things: China tariffs, and I would say antitrust policy that I applaud him for in his first term, that Biden continued and expanded on in his,
Yeah.
and then I hope to see that it keeps going, as we push forward here. I don't know. Claudia, what do you think of that? I assume you come more from sort of this traditional school of economics that says this cheap trade with China has traditionally been a good thing, or not. I don't know. What do you think?
Right. So it definitely was a good thing for consumers, and that is important. And we've definitely learned that in recent years, that having those higher prices can be a real hardship and makes people angry, even if it's not a hardship. It's like in the economics, thinking about trade, the idea that there are winners and losers, like that is in the fabric of the theory. Like this wasn't a surprise. It was more the implementation, not taking some of the gains from trade that were going to the consumers, pulling some of that and helping communities that were losing their main sources of income. I mean, there were retraining programs, but they really were half-hearted and they didn't do the job. So there absolutely there was an opportunity, because there were gains created from trade that could have been used to smooth out that transition. Transitions are so hard.
Mm-hmm.
And this is, opening up trade to China was not the first transition that the U.S. economy had gone through, right? And so we missed. And I think, it's not like there were certainly some economists, I think, who sounded the alarms at the time, but it's something that now in hindsight is much more appreciated, that like there just wasn't enough done on the policy, like to actually implement it. But then we ought to we need to create some gains to then help those who. So I am more sympathetic, I think, to some of the industrial policy arguments. I mean, those the thing about those in economic theory is you've got some actor like the government who's going to decide, well, who are the losers that we need to help, and how are we going to help them? And I mean, another theme that comes through in the Trump administration is a deep distrust of the government to do anything competently, right? And I'm much more like, my training, my work is the idea that government can do good. And I think so I'm more sympathetic to some of the industrial policy that tried to target, like with the CHIPS Act or the other thing. Now, those created, stories and headlines of waste or absurd, like extra bells and whistles the Biden administration tried to put on. And so that, those aren't perfect. Like industrial policy isn't, it's hard to do right. But, having something that's a little more pinpointed strikes me as a better approach if you're going to do that, in terms of these very blunt tariffs on everyone and everything, right? Like it just, but we're going through, I mean, you mentioned the economics and the theory. The one thing, and now also being in this kind of forecaster space, like, what happens to inflation and how big it's, we are in magnitudes. I mean, you showed the clip at the beginning with Ferris Bueller. I mean, these tariffs, when you add them all up, we're getting up to rates that are above Smoot-Hawley.
Yeah.
Right. And so that's going from like 2%, 2.5% effective tariff rates up into the 20% plus effective tariff rates. That is a massive change. And any of the kind of models we use, the theory, the metric, like they're all kind of trained on history that just doesn't include numbers like that. Like we don't have those statistics. We don't have the intuitions. The economy is very, very different from the last time we saw these tariffs. So I take a lot of humility in a moment like this about like, well, what happens next? It's like, I don't know. This is a really big change. And this administration has proved very, like, they want to go fast. Move fast and break things. And it's like they are, right? And so then it just makes it really hard to have a firm sense of where, I think we're headed.
Okay, so I see comments like this both online and from people I really respect and talk to, that this is a purposeful recession, that there is a desire to slow things down, and part of it is that there is a massive amount of debt coming due. I think one of the economists I speak to said, it's something like $7 trillion coming this year, and so they're really just focused right now on the 10-year rate. And let's not. I don't even think it matters if this is like a goal, because it's an outcome that will, likely come from this, is that this is recessionary, also inflationary. So how does the Fed even approach this? Like what you just said, Claudia, is kind of, it seems obvious, but also mind-blowing. We don't even have models for something like this. And yet the Fed is going to be meeting. They're going to be seeing that, we're seeing the Fed now numbers are showing contraction in the economy. That's no surprise. That's likely what we're going to be seeing now. We're going to be seeing inflation. If we are going into a recession in which, or it is a stagflationary environment, and now the Fed's hands are kind of tied in terms of reducing interest rates, how do they look at this, and what tools do they have in this kind of scenario?
Well, none of us should expect the Fed to step in and save us from this. Even if they wanted to, right? Like the tools, again, 20+% effective tariff rate, 25 basis points on the Fed funds. I mean, or whatever it is, 100 basis points. So it's not like the Fed is going to step in and they can undo whatever economic damage these tariffs are going to cause. The Fed, I think, is going to move very slowly. They've fallen into, I think, for some good reasons and not good reasons, into being very data dependent. And they are going to, and it's going to take some time for this to show up in the data. Mm-hmm. It's like all of the different policies that have come out in the last, couple months, it's going to take time before it shows up in the data. The Fed is going to continue to kind of wring their hands. There's lots of uncertainty. We have to look at the totality of the data. We have to look at all the policies, blah, blah, blah. And so I think this is not like in the first Trump administration where they were doing insurance cuts, right? Like it looks like growth is slowing. We're going to cut rates. That is not, given the fact that inflation has been above 2% since 2021. I mean, it's not highly elevated right now, but it hasn't moved back to target. And we're going to see, probably the first thing we'll see are the prices moving up. Mm-hmm. I mean, frankly, we've already seen some prices move up, knowing that the tariffs coming. And so when we go into a recession, the Fed will cut rates, but I don't expect them to be cutting ahead of it. And frankly, like I said, I don't think it matters what the Fed does. I don't think they're the stop valve on these policies. Potentially Congress could be a stop valve on some of the tariff policies, but I don't expect that one to get put into motion. But so I think this will be a very slow moving Fed unless markets stop functioning properly. Then they'll move in.
I have a question for you, Claudia. I heard this and I was like, I need to ask Claudia because I just don't know. Okay, we know that if inflation is created on the demand side, that's what monetary policy is made for. Tamp down demand by becoming more restrictive. Fine. But I heard that if inflation, so prices rising, are pushed on us, let's say from tariffs, and it's constricting GDP growth, or let's say the labor market, which is actually part of the Fed's mandate, that the Fed actually could cut in the face of that because that's not demand based, that's getting pushed on us. Is that true, or did it?
Yeah. I mean, well, the Fed can do whatever it wants.
No, I mean, just theoretically.
But no, yes, absolutely. And so if you have inflation that's caused by like a cost shock, right, where it's pushing up inflation, it's a negative on growth. There's a case, and this was what the Fed used during the first Trump administration, though the inflation effects weren't as pronounced then, but just the idea that, well, we can quote unquote look through the inflation, because of the cost shock, if it doesn't have this demand push behind it, it will retreat. It'll be transitory or temporary. And so then the Fed can say, well, okay, we're going to react to the fact that growth is slowing, that unemployment's rising. And so now we'll cut. the caveat that showed up in the model simulations during the first Trump administration, with talking about tariffs, and Powell and others have mentioned it since. The big piece is, do consumers and businesses think it's going to be temporary inflation? Mm-hmm. If the expectations would move and people start thinking, wow, inflation is just going to be higher, like not just this year, but for several years. And then the worry is then they change their behavior. They say, I'm not going to do the work unless you pay me more. Or the business, I'm going to actually kind of preemptively raise the prices because I know, my costs are going to go up. So this inflation expectations that gets talked about, I mean, the Fed officials have, it's a big deal. If the long run inflation expectations are well anchored, then they have kind of this, go ahead and cut. But you have to remember, this Fed, that was the logic that had them wait on increasing rates in the pandemic. Mm-hmm. Because it's like the pandemic, the supply chains, these the cost shocks. And in fact, those were temporary shocks to the system. It took more like 2.5 years than 1 year. And so they really got burned. That inflation started and then it spread. And so that's where I think the next move of the Fed is to cut. But it's this question about how quickly do they get there? And I think that process of figuring out, like, is the inflation really temporary? Are people starting to build it in for later? Like, it's going to take them some time to get comfortable with the idea of, oh, no, see, it was just a one-off. And now we can cut. But yes, absolutely. They could come out. Jay Powell is speaking on Friday. He could come out and say this exactly, and they could announce cuts tomorrow. Right. They're not going to, but that would be on very firm ground with this kind of.
The arguments about the efficacy of Fed loosening right now are also very strong. Like I hate to say it, but it almost doesn't matter. If in the world that we live in today, like, who knows where this thing is in 14 hours or 14 minutes, but it's just that's not going to help.
And so it's funny. I mean, if you look at CME Fed Watch, for example, right now, it's still, the expectation is that there's a 25 basis point cut coming in June. And there's like a 78% chance that there will be another cut by September, which is probably. I guess I don't remember what we entered the year with, but I know we entered the year thinking that we were going to have a couple of cuts this year. It still seems like CME Fed Watch expects that, and I think it's interesting. My initial reaction was, well, if it really is stagflation, then that really does tie the Fed's hands. But if that inflationary shock is truly transitory, maybe it doesn't really have that same impact. I guess it just, we have no idea because we can only speak to what we're seeing today, as you're talking about, Ophir, and who knows what tomorrow is going to be and what the reciprocal, what the tariffs on the U.S. are going to look like, and how does this thing spiral or not?
I don't think people remember what a recession feels like. I'm going to tell you the truth. Never mind what it feels like in your pocketbook, like what it feels like in the air, right? It just, people don't remember. Things are going to change if we get a recession. I don't know what things change mean. It's very easy for me to say, but like an actual recession, we're not ready for it. And also the tariff rates as they are now are not reflected in the market at all. I'm talking about the equity market or risk markets at all. If we actually believed these were the tariffs that were going to be in place for the next 4 years, I mean, this is the greatest short ever. Right? No, the S&P is wildly overvalued. What are we at, like now? Then 30 times 2026 earnings, because I mean there is going to be a shrinkage in earnings. 41% of S&P 500 revenue comes from outside the U.S. So this is a wildly overvalued market if this is where tariffs land.
Yeah. What did you? I think in your email before the call you said a lower multiple, lower EPS. SPX 4000.
I would say 4000 would be maybe fair value, and when we go into a bear market, you do not stop at fair value. Just to be clear, bear markets, and it's intentional. It's not a mistake. It's a risk barometer. You have to go below fair value just in case things shrink faster. So we're looking at like 3200, 3500, right? And then fair value is 4000. It's not a prediction because how can you predict when you don't know what tariffs are? But
yeah, I mean, I've had people emailing me, messaging me, being like, "Hey, you buying into this?" There's still that buy the dip mentality, for anyone who's doing some short-term movements. And my response has been the same to all of them. I'm not trying to catch a falling knife here. That's
I buy falling knives all the time. I'm not buying this one. And
it's been a good strategy for now, since like 2009, 14 years.
I was on the trading floor making markets on NYSE Arca when, Bear Stearns went belly up, Lehman went up, VIX hit 80, all that.
Mm-hmm. Yep.
I've seen these things. We've all seen COVID. This is not that. This is not that.
Okay, so is there anything that gives you guys some hope, and anything positive that we can take from this situation right now?
I have some, but I'll let Claudia go.
No, go first. Inspire me to say something hopeful.
The pressure is on me. I would say a few things. First of all, this is just a matter of how it works in the market, at least. We are famous last words. I almost said this is the worst case scenario. This is far worse than anyone anticipated.
Correct. Yeah.
In regard to the initial proclamation of tariffs. Okay. So it's now hit the market. We're not done going down. It's fine. But so anything that's not the worst case scenario could generate positive momentum. I'm talking about the market now. The economy, unfortunately, is not quite that easy. So that's one. This idea that there will be deals made and they'll be they'll turn into headlines. You can almost see it happening on Twitter, right? Like, hey, there's a deal. Like the Vietnam cutting of tariffs, which was a week ago, is now being released as like it's noon, like it's news, and it's like it's not. But I get the sentiment. So that these are things that are like you get to peak pessimism or trough pessimism. I'm not sure what the right word would be. Then there's kind of only one way to go. Having said that, I don't think we're at the worst. I think services retaliatory tariffs could come if this is what the U.S. is doing. And that is, we are going to forget about Liberation Day if that happens. Completely forget about Liberation Day, what that means to the U.S. economy. So, but if that doesn't happen, then, we're peak pessimism. Here we go. That's the best I got.
Okay. Fair. Yeah. Claudia, anything?
that inspire you? Inspired me. Yeah. Let's see. We didn't... there's still very high uncertainty about what comes next, but we did get some clarity yesterday, right? In terms of what was meant by reciprocal tariffs. I think the administration has really laid out its true colors on their tariff policy. So you kind of know what's coming at us. And I did find it's somewhat hopeful in the last few days to see some engagement. This is very early days engagement from members of Congress. I know there was, even though it was more ceremonial to have some Republican senators push back on the tariffs against Canada due to fentanyl, that did happen. And there were legislation introduced is too fancy, but there's been some pushback, because the one thing that we've seen over quite some time is a weak Congress in terms of doing economic policy. Like you've had a kind of a strong president. Biden really drove on a lot of his policy, the economic agenda, including the industrial policy piece. And we've seen with Trump right now, these are the emergency powers that President Trump has invoked to go through and do these sweeping tariffs on a very short timeline with basically no outside review. Like Congress gave him that power, right? Like and so this could be an opportunity to really kind of force Congress, like this tariffs are like your job. Right. So maybe we get into like kind of recalibrating this, because there are some real problems that these policies are supposedly directed at. right? There are workers, there are communities that got hit hard by trade and have been left behind for a long time. Like it's not that they're not making that up. It's just your solutions need to fit the problem, and they need to actually be solutions, not cause bigger problems. So it's possible that if you bring in a larger deliberative body and you kind of get this, slow this down, fix it up, maybe we get to a better place. So it's kind of like you gotta, it's darkest before the dawn. I'm not sure we're really at the darkest, but I mean, it's very clear. And again, the policies, we feel very off kilter, not just with the tariff policies. I mean, they're shredding the federal government.
Right.
Grants and there's just a lot of things, a lot of the locus of power is very much in the White House, and much of that power they've been, kind of delegated by Congress. And I'm just kind of thinking maybe when you see market reactions, when you see that's the checks and balance step up. So that's the best I can do for being optimistic. And we should have a fully functioning, like all pieces need to be working
co-equal
together.
Co-equal branches, right?
Co-equal, imagine that. Yeah.
Can I add to Claudia's optimism, because hers is much better than mine?
Yeah.
Senator Rand Paul, junior senator from Kentucky, was not only did he say tariffs are wrong, this is blah 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 blah, it's a bad idea. He was very specifically standing next to Senator Tim Kaine. And Senator Tim Kaine is not just a Democrat. He was the Democrat on the ticket for Hillary Clinton. Like, you could not have Hillary Clinton's not in Congress. You can't stand next to her. So that, I mean, as a show of bipartisanship, even for a snapshot by two senators, I mean, that's kind of, I guess he could have been standing next to Schumer, but that's pretty good for the beginning of bipartisan, hey, I don't like this tariff thing. This isn't quite right.
I mean, I think the spirit of elections have consequences is we're living through that now, but every single one of those representatives in Congress understands that they have to stand for election really, in the House really soon, and in the Senate, a third of them pretty soon. And, I think they well understand what this kind of policy is going to mean for the economic situation when that election happens, and what you usually see in reaction to that. So, I think it's high time for the legislative branch to reassert itself.
There's only one player in this, Dave, that doesn't have to run for re-election, and that's the guy making all the rules.
Yeah, exactly. I think that's a great way to look at it. So maybe some optimism as the markets are still down about where we started this, and from their peaks, we've seen the Russell 2000 drop more than 20% as of today. We've got the NASDAQ down well over 16% and the S&P well over 12% from its peak. So, we're into correction territory on the main indices and well past it for the Russell. So, the market is reacting pretty strongly. And I don't know. We'll see where things go from here. I thank you both so much for joining us as usual. Super interesting conversation. A lot of people watching, a lot of comments coming in. So again, thanks for joining us, both of you, and I'll look forward to the next one when we're talking about the world's reaction in a couple of months.
The optimistic
good. Thank you. Yes.
Let's hope. And thanks everyone else, all of you, for tuning in and watching. We're not going to have a Let's Talk Markets next week, as I'm going to be in DC. I'm going to be on the SEC's second crypto roundtable talking about trading and intermediation. And you'll be able to stream that online. So check that out on Friday afternoon. And I'll also be trying to yell at people to fix our markets while I'm down there. But we'll be sure to be back the week after with plenty of great coverage on market structure. So thanks again for joining us, and we'll see you all next time.
Thanks.